Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools, Matt Frankel and Lou Whiteman, giving a 1 to 10 rating to a company whose potential and its performance haven't quite been on the same page. It's Redfin, ticker symbol RDFN. We'll talk about the business first, including industry and competition. A 10 is invincible, a 1 is hopeless. Lou's at a 5, Matt's at a 6. Lou, why the 5?
So I have to say, this is a lower score than I would have given this business a year to 2 years ago. And full disclosure, I am still a shareholder, but I own less of this business than I did a couple of years ago. I've always thought of Redfin as the one with the best chance of disrupting real estate just because it was working within. It was not trying to topple the system. It was trying to bend the system from within. I still think that's true, but I'm sort of kind of giving up on anyone disrupting anything in this industry. There are so many things wrong with the U.S. housing market that no broker, Redfin, or anyone else can solve. And thanks to litigation, agent fees are likely headed down across the board, which could cost Redfin some of its competitive advantage. All in, I think the business is fine, but I'm having a harder time seeing it doing anything more than plodding along with the market from here. So right down the middle, 5.
See, I said a 6, but I'm going to push back on Lou a little bit more than how close our scores might indicate. So one, I would argue that it's a much stronger business than it was a year or two ago. They got rid of Redfin now. They focused on efficiency. They did like 3 rounds of layoffs. They right-sized their headcount. So I would argue that it is a stronger business than it was a year ago. The real estate market is essentially the same as it was. And you know, the margins have kind of reflected that. The real estate market you're correct. It's been agonizingly slow for about 2.5 years now. It doesn't seem that long. And it's weighing on Redfin's business. They compete with, every legacy broker that you see have a sign in somebody's front yard, Century 21s of the world, the Berkshire Hathaway, and things like that. And as well as a few online competitors that are promising, like EXP. Pretty much every realtor I've used in the past 10 years is now an EXP agent. So it does have some competitors. Its other businesses like mortgages are also very competitive spaces. But Redfin is the only broker that seems willing to compete on price. And I would push back on Lou about the recent litigation that changed the cost structure, is now it's making consumers more fee aware. You see the value in the agent, but if you can, now people know what they're paying their buyers agents and sellers agents. And someone who's willing to compete on price could be a natural beneficiary of that. The biggest concern to me is that their market share has declined by 2 basis points. In a weak market, if you're gaining market share, it's still okay. But that's really the biggest issue to me.
Let's move on to management. A 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have an 8. Matt, you're more bullish on Redfin. Go ahead.
Yeah, I mean, we both like Glenn Kelman. He's making the most of a bad environment, I guess I could say. He's made some tough decisions, and he's made them quicker than peers. They shut down the money-losing iBuying business, Redfin, now quicker than, Zillow let it get completely out of control. They added rental listings in March of 2022, which turned out to be one of their best moves. That's been the strongest growth area of the business lately. And they made some very tough decisions, like those rounds of layoffs I mentioned, to make net losses narrow. And no one's figured out how to disrupt real estate yet. My thesis on Redfin is basically that real estate is disruptible. No one's figured it out yet. Whoever does is going to be a big winner. So from a risk reward, I bet on Glenn Kelman.
Yeah, no, I think the world of Kelman. I'm not going to add much. I will just say that, and you're right, Matt, he's been more decisive, but the thing I really respect about him is he's patient. He's always looking past the current cycle. So you need to be both decisive and patient. That's a real hard thing to balance, but that is kind of how I see them. And I for all my worries about this company, the CEO is not one of them.
Financials, a 10 is a fortress, a 1 is yikes. Lou's at a 5, Matt's at a 6. Lou, go ahead.
So we have seen, it's been a bad market. We have seen negative cash flow in the last couple of quarters. And I'm not going to chicken little this. I don't think the sky is falling. But again, I just have a hard time getting excited. Matt mentioned the market share earlier, and this is kind of where I was going to get at that. This is a massive market. You only need a small share to be huge. But the bottom line is they haven't been able to demonstrate that they really can drive share gains with the model. It's hard for me to see anything to get excited about. would assume that a housing recovery lifts all boats, Redfin included. So I think the financials will improve over time. But I have a hard time seeing how it becomes this supercharged financial juggernaut that I think I'd hoped it would be. Matt, maybe you're right. Maybe if someone disrupts it, it can. But we also have to ask the question, maybe no one disrupts this.
Yeah, I mean, I don't see us buying homes in the same way we are now in 20 years. Now, whatever that looks like is anyone's guess at this point, but I do think the industry will evolve quite a bit. It's very antiquated. But for financials, I give it a 6. I agree with everything Lou said. They did have a $34 million net loss in the latest quarter, but they are profitable on an adjusted basis. The other side of that is their stock-based compensation, which I've become the stock-based compensation police over the past year or so, is way out of control. It's roughly $1 billion market cap company. It might even be less right now. $70 million of annualized stock-based comp. You have to earn a 7% return just to offset dilution. They do have sufficient cash for a while, which is why I ranked it as high as it did. And it's the stock-based comp is trending slowly in the right direction, but I think they should fix. I think a lot of companies should fix that, but Redfin's one of them.
Let's move on to valuation. Let's see how the stock's going to do in the next 5 years, even with that dilution. And also, how safe is it? A 10 is a sure thing. A 1 is a lottery ticket. What do you got, Matt?
I mean, I said 10 to 15%, but with a big asterisk here. I think it has 15% plus potential or much more if the housing market cooperates. Remember, this was an $80, $90 stock a couple years ago during the strongest housing market of my lifetime. The stock could double or triple if we get a normal real estate environment, normal in quotes, because, what's a normal recession or normal real estate environment? Anything normal in finance. But it does have the potential to have negative returns if it doesn't. As Lou mentioned, it's negative free cash flow. That can only continue, but for so long, especially in a poor environment for raising capital. So I give it a safety score of 4, but I'm hoping it's in that 15% category.
Yeah, so I'm a little more pessimistic. I'm at 5 and 10% here. And now, full disclosure, Matt, I don't know how to describe it because what's normal, but I think housing is going to stay complicated for longer than I think it should. I'm not convinced on the direction of rates over the next few years. Just talk of tariffs and thinking of Canadian lumber and really gumming up the works with housing. I'm worried that housing is going to stay mired for longer than I think it could. I don't know how Redfin really takes off with housing the way it is. Market perform-ish over the next 5 years. I'm at a 4.2 for safety. I don't think Redfin will disappear, but if it did, the world would go on. And again, 50-50 at best, whether or not it beats the market. And that's probably being generous in my mind.
Matt, as we talked about, you're a little more bullish on Redfin than Lou. But for this Top-It segment, is there a company in Redfin space you like more?
I'd say Dreamfinder Homes. It's not really a competitor. I wouldn't invest in any of the legacy brokers over Redfin. But Dreamfinders Homes is my favorite play on the housing market if you're bullish on housing. That's by far the larger of my two investments in my portfolio. I do own Redfin, but I treat that as more of a speculative investment. Dreamfinders is highly profitable, growing very fast, and they specialize in entry-level homes, which I think have tremendous tailwinds over the next 5 years. Just, how many of your friends have wanted to buy homes in the past few years but couldn't because of either mortgage rates or affordability concerns or things like that? So I think they'll have some big tailwinds coming up.
So yeah, I'm a similar direction. It's when it comes to Redfin's core competitors, and no one I like better. But in the broader housing, let's look at TFSL, Third Federal Savings. It's a parent of Third Federal Savings. They are a mortgage lender. Both companies really rely on the housing market. TFS offers me an 8% dividend yield right now, and I think both companies will make it. So I think that dividend yield is relatively safe. So I'm going to take, I think, just the financial business with the dividend as a better housing play right now.
Thanks to both Lou and to Matt. They've given Redfin a low overall score of 5.9 out of 10, well short of that 8.0 that would force me to own shares like Lou. Lou, do you own shares?
I still do, yeah.
You still do, yeah. So like Lou and Matt, I do own shares as well. We'll see how that goes. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Trax. Till then, Fool on.